Samir, you've been at the center of the payments action in India over the last 3 or 4 years. Take us through what you've seen happen, but more importantly, where are you seeing the industry go? What are we likely to see in the next 3 to 4 years?
So I think we entered the market in 2016 along with UPI, the first sort of non-banking app that entered the market. It's been a absolutely surreal ride, to be honest, because when we entered, we kind of set the expectation with our board that it'll take 2 or 3 years for a project like UPI to really take off. And after that, as with all good ventures, you need a lot of good luck and timing. So demon happened a couple of months after. I don't think the markets ever looked back. Demonetization happened, became the biggest trigger for people to need to transfer money to each other, which made UPI suddenly come to the forefront. And then I think it's been a tremendous amount of push, unprecedented push, where the government, the regulators, and the industry are actually in the same direction, sort of creating tailwinds one after the other. So I think from that standpoint, we've seen over 120 odd million people in less than 3 years adopt technology that India has created in a completely new paradigm, which is fabulous. I think last month, I think there was a stat out that UPI has crossed 1 billion transactions every month. It's probably more than what you're seeing on an annualized basis in all digital or all card plus digital payments 3 years ago. So I think India is taking to digital payments, especially mobile-based payments, in an unprecedented manner. And it actually will become the trigger for the digital economy opening up. 4 or 5 years spent at Flipkart before that, we used to count the number of digitally connected people in the tens of millions. And post-Geo, we are seeing a lot of applications that now have over 100 million users. The obvious ones being the contact apps, the chat apps, social media apps. But now 3, 4 payment apps are now boasting of 100 million plus users. And that means that number of people transacting digitally in India for the first time is starting to catch up with the connected economy. And I think over the next 3 years, we expect about 500 million people to have done their first digital transaction through a mobile device and through a bank directly over UPI. I think that is unparalleled worldwide. If you see, even in markets like China, most of the transactions are happening in what we call the sort of virtual layer, which is in the wallets layer. In India, the money is flowing and the data is flowing through the banking system, which is very, very exciting because I think it'll create a data pipeline and stream that'll allow lending to happen, that'll allow insurance and other sectors to open up because data was missing. A digital data footprint on half the population, if we can achieve that by 2023, I think India's in a really good place.
Abhijit, you've been in the POS business earlier, now on, the UPI side of the house. A lot of the UPI payments, the volume is driven by the peer-to-peer payments part of it. How are you seeing the merchant payments evolve? Where is that headed? What is the likely scale that you would anticipate?
So yeah, I've been fortunate to be on both sides. I think Samir pointed out this is a journey, right? And the most important thing is to bring more and more people on board. So peer-to-peer is going to scale very, very quickly because, as you said, we do have more and more of the consumers on an application of their choice and activated on UPI. On the merchant side, I think the most important thing is the interoperability. So I think what UPI has done phenomenally well is create a standard, I think, unprecedented globally, to say that if we're going to put a QR code in a store, it has to be interoperable across all different applications. So because it's interoperable, all of us are basically jointly creating a merchant network that's activated. The way the POS world worked was if you had a terminal, it was specific to a certain type of transaction. So India, I think, is very much at the cutting edge in terms of activating. You're seeing huge onboarding of merchants through a variety of different ways. It could be a static QR code, it could be an application, it could be an integrated and smart point of sales, all of which plug into the same plumbing. So we're excited. I think getting the consumers to do their first digital transaction, feel safe and secure that the money can flow. The fact that it's going through the banking system creates a level of credibility and security. And now our next job is to bring the merchants on board.
And so let's talk about the merchants getting on board a little bit more, right? Because all the excitement has been about consumers getting on board. we get into the transaction footprint of merchants, and the UPI footprints are still very, very low. They're encouraging to the extent that it's 5%, but we are not seeing a broader footprint in terms of the merchants' overall business.
So, at least at PhonePe, we process over 400 million transactions a month now. More than 50% of our transactions are merchant, by the way. So I think NPCI has not actually showcased how quickly merchant transactions are ramping up. We're adding almost 1 million merchants a month across India right now, at about 7.5 million merchants. That's just PhonePe's contribution to how many merchants are accepting UPI-based interoperable payments. Paytm, Amazon, Google Pay, a lot of other players are doing the same now, BharatPe. So actually the merchant network's the largest it's ever been. I remember a stat when demonetization had happened, I think there's about 2 million POS devices across the country. There's more than that being added every quarter on UPI. So I think some myth busting will happen very soon, and NPCI is talking about reporting sort of merchant or P2M transactions. That volume out of the sort of billion plus transactions that happened last month is already north of 200 million transactions on UPI alone. The other thing that's happened, I think it's very positive, is that the regulators finally allowed standing instructions and tokenized payments to happen on the card networks. I think that was a long time coming. So I think Visa, MasterCard, RuPay will also be able to sort of drive much better experiences on payments at a much larger network of stores. I think what's been most exciting, Alok, is most of the demand for digital payments for us is coming in tier 3, followed by tier 1 lower income strata, then tier 2, and then tier 1 metros. The cash resilience of the Indian economy is actually with those who have the most. Those who have the least amount of disposable income are actually looking for convenience. They've been out of the formal economy. So when we go into a tier 3, for every 10 shops we visit, conversion in terms of digital payment activation is almost 90%. You go into the premium segment, it's maybe 40, 50%. So we're seeing a very distorted reality in terms of numbers. On the ground, it's very, very different.
Abhijit, what have been your experiences with the SME side of adoption? So in fact, I was at another panel a few weeks back, which had all the traditional merchant acquirers.
Right.
And the vision statement was in the next 5 years, 5 million merchants should accept electronic payments. It was like, UPI probably has much more than that already.
Yeah.
How are you seeing this disruption from the classical mode of merchant acquiring to adding, a couple of million merchants every quarter?
That's right. So already, WhatsApp itself has over 400 million consumers, but over 1 million businesses or small businesses use us and use our business application. And of course, that's just the organized side of things. Unorganized is much, much higher. So a couple of interesting things happening right now. One is, first of all, we shouldn't throw away and kind of make light of the existing model. There's a lot of knowledge and experience that's gone into kind of how that model has gone through. Especially making sure that we onboard the right quality of merchants. There's a set of guidelines and guardrails in place to make sure that consumers are protected as they do their transactions. So disruption will happen for sure, but certainly there's a level of diligence that we should never go away from, which I think the old system has done very, very well. That said, the ability to onboard merchants will be much quicker now. The biggest problem we faced at EasyTap when I was there was ultimately you had a CapEx cost that was flowing through the supply chain. So when you put a terminal, whether it's a big POS terminal or a small POS terminal, which was the means of transacting, you're already in the red as a bank. And hence, what happened was we were self-selecting what sectors we would go after. So there was a chicken and egg problem. You were only going to go after the high margin sectors because that's the only way you would return investment on your CapEx, and we were stuck there. Now as we digitize and applications and QR codes can enable, I think you'll see an unleashing of a sector that would never have been able to be brought on board with the old traditional simply because of the economics of the industry.
So what are the bottlenecks here, right? From getting to 120 million to 500 million people using it, what would be the 1 or 2 key items in that stack, right? So there have been issues around who's permitted to play, who's not permitted to play, MDR issues. In your mind, just what are the top 2 factors?
I think who's allowed to play and not allowed to play, less of a concern for me, to be honest. I think Bobby can talk about that, but I think there's already a lot of players. So I don't think it's not competitive enough. There's easily about 40 people that have rolled the dice on digital or mobile-based payment apps. There's 40, 45 known wallet apps that used to be there, a lot of UPI-based players. So I think competitions at sort of scale, the MDR one and the KYC regime, these two things, the back and forth on the regulatory side has been a cause of concern. We do talk as an industry to the regulators, to the policymakers. I think the recent MDR announcement, for example, I think it's too swift to move to a zero MDR regime. I mean, let's look at the industry here. There's a lot of players who have invested millions, close to a few $1 billion now in digital payment acceptance, and there's, I guess, an underlying assumption that you will be able to make money. If you take away all monetary incentive from the private industry, then the burden on laying out the entire infrastructure and going to that last mile, going to tier 3, going to a village, going to every train station, railway airport, that then falls on either the PSU banks or on the regulators themselves. Now, regulators obviously can't lay out infra. The PSUs have proven to be, unfortunately, incapable of going that far into the ecosystem and leading innovation, to be honest, right? So I think India needs to find low cost at scale answers. Low cost I agree with as a principle. I think China's gone very low cost on MDR because the volumes are that large. If everyone's going to switch from cash to digital, you can't take 1% MDR on every transaction. That just means that if money turns 100 times, essentially, that money's lost all its value. That makes no sense. But 0.1%, 0.2%, some number has to persist. And I think this oscillation between is going to be at the US levels of 2.5%, 3%, or is going to be zero, or you're going to do full KYC or do no KYC. We have to find an equilibrium in policy, and it needs to last 3 or 4 years. I think that's one big concern because people are scared of building a 500 million user base or trying to build a 20, 30 million merchant base by investing today if there's no clarity on whether what they've enabled will survive. Take the wallets, right? Several wallets were basically like onboarding tens of millions of consumers every month 4 years ago, just as recently as 4 years ago. And then the KYC policy comes and says you have to do paper KYC on everybody. That number goes to zero. That's a very, very expensive misadventure. And that was entirely avoidable. So I think that's the one to watch out for.
But is the tacit statement really that payments is not a standalone business? Is that really what is being communicated?
I think it's a viable standalone at scale business, viable in that merchants will pay a fair MDR because the amount of convenience and efficiency you can bring in. And by the way, just the data that's available to merchants on their digital transaction flow will make it way easier for them to actually be able to get working capital loans, will make it way easier. The solutions built on top of payments will make it way easier for them to grow their business, to have a CRM with their consumers. Today, most offline businesses in India don't know who their customers are. A small kirana shop might know 20 familiar customers, but a big shop, especially like if you go into a large hypermart, there are thousands of footfall. They don't know who their customers are. And those things will change. So there's a much larger economy opportunity, opportunity. But therefore, the people who are enabling payments need to have some incentive. Otherwise, I think the big risk we have in India is that the only people that can play are the ones that can actually burn the maximum amount of capital with the longest runway. And then you have this entire narrative of, well, will only the MNCs be able to play? Because, well, we are running on equity today with the promise of making money. Most startups in India. We can't afford to be running in the red forever. We don't have a bottom line feeding us. This is our core.
Yeah, having said that, we do have the promise of lending, so that should take care of everything else. Abhijit, walk us through, from a point of view of entrepreneurs in the audience, if they look at this vision of, 500 million Indians transacting electronically in the next 3, 4, 5 years, what ideas, what spaces should they be thinking about? And I do want to go beyond lending. Every second businessman I see today is, we'll monetize lending, which is great.
Yeah.
But what beyond that?
Well, look, I think let's go back to first principles, and I think Samir said it very well. And you need to understand what your core value is, right? So ultimately, if you're in the business of just literally moving money from point A to point B, it's only going to be a scale business. So I'm not saying that payments itself isn't a business, but if you're an entrepreneur and you're coming in against established players who have low cost of capital, have longer reach, you have to really think about what's your value proposition, what you're playing in. So you're either basically going to be the tip of the sphere. So I'll give you an example at EasyTap. We actually, for better or for worse, said we had no interest in literally just being a POS company. Right? It was not able to satisfy my ability to go to my investors and say, I know why a merchant will say no to a big bank and stay with us for 10 years. So we took the direction that says if it isn't an integrated play where you're actually helping with business processes or improving the efficiency or profitability of a company, there's no reason for somebody to stay with us. Then we're just shipping boxes. So that's one lens. Can you be in payments but basically do something that on your own software capability is unique vis-a-vis somebody who has got scale at the switching level, A. B, you can make the assumption that platforms will come and play. So there will be platforms. So I think on the consumer side, consumers will pick the application that is most convenient and trusted and whatever for them, and we will digitize the consumer side. On the merchant side, there will be different sectors that pick different players, but again, the merchant side will come on board one way or the other. And there are different players going after different sectors with different acquisition strategies. So you can assume that we are going to have an environment where consumers and merchants are going to be able to transact. I think there's two things I would look at. Number one, the great thing that people are missing is the entire digital payments ecosystem of India is functioning and scaling without credit at any scale. So we do need to talk about credit, right? So convenience is one angle. The dematerialization of the infrastructure, i.e. no card on the consumer side, no terminal on them, means that the cost of activation is much, much lower. There should be a baseline, I agree, because there has to be some business model for the rails. But you haven't seen anything yet until merchants have access to working capital based on their transaction history and consumers have access to actual credit. And that will take time. First, we have to digitize. Second, we need enough transactions to build a P&L footprint for both sides. Third, you need enough data and analysis to actually create working models. So this is years in the making. So anybody who's in a rush, I would say don't be in a rush. Let this thing evolve. India's on a phenomenal trajectory. And if I was so payments is great. Don't get flustered where the market is today. Look at legitimately where the market naturally is going to go tomorrow at massive scale, unseen anywhere in the world. And the final point I would make is, as you know very well, Alok, when you have platforms, which is the hardest part, you can sit in and make sure that you add a value-added service on top of it. It could be credit and lending, it could be anything. But we will enter a world where commerce will be digitized, and companies that actually do something exceptionally well in the commerce cycle, or have a service that needs to be match-made with somebody who you otherwise couldn't have reached to, that is going to be available to you as well. So I think there's a lot of opportunity.
Samir, any other ideas of where entrepreneurs should go?
So at least sort of ecosystem that we are trying to enable at PhonePe, most of the young entrepreneurs we are talking to, I think 90% of all the shops that we talk to are actually struggling both on the growth side and the working capital side. So keep lending aside for a second. I think that will possibly be overserved in the medium term once regulation eases up. The real opportunity is to provide great connects between consumers and merchants to improve qualified footfall for the merchants, to improve the kind of ratings and reviews and information that consumers want to find the right merchant. That kind of connects missing. We only have it in the formal sector. We don't have it in the unorganized sector. CRM solutions. And let's just look at what's happened in the online sector in the last decade, right? Every single vertical that's grown at scale, there's been a lot of investment, cashback, discounts, etc., to drive people to adopt online. But if you look at the offline world, actually every day in your neighborhoods, there's literally thousands and thousands of offers running. There's inventory clearances, there's sale events, there's SKU level offers. Merchants don't have any way of communicating this to their neighborhood. And yet India is so value conscious that any marketplace you go into, you'll see people standing at a shop and literally haggling over the price of onions and potatoes, right? Imagine the kind of value you can unlock if information flows both ways. I think the size of the economy, the way we imagine it on the retail side and the services side, I think that's actually the one that's most exciting for me. Because the number of entrepreneurial sort of use cases you can come up with that'll really start creating interactions between hyperlocal communities. That's going to be phenomenal. I think that's the power of technology on a 5-inch screen. That if you can take that technology or that 5-inch screen and make the kirana shop owner the master of his or her own destiny in a way that the large online players are, that is going to be transformational.
Yeah.
Tell me, both of you are very ambitious entrepreneurs. UPI is a very unique development for the Indian market. From what I understand, there is a lot of activity to say, can this be replicated in other parts of the world? As payment companies, how are you looking at your own businesses from a global standpoint? When do we see an Indian company get to global payment scale?
I think 3 years or less, and I think there'll be two drivers for it. One, in terms of consumer base, thanks to Jio and then Airtel and Voda really crashing prices, we're finally talking about homegrown companies also reaching 200, 300, 400 million user bases, right? So once you have a really large base, it means your underlying technology stack has matured to a certain level, your ability to scale has reached a certain level. Your confidence level around being able to cater to a global audience itself in the first place, that changes. We're already seeing startups like Zomato or Ola already entering other markets. If you can learn how to scale your tech stack, survive the regulatory environment, it's like surviving traffic in India. If you can survive traffic in India, you can drive the Grand Prix anywhere, right? So it's if you can learn how to play the game in payments here, and UPI decides to actually start expanding, which it is, that'll make it much easier for Indian startups to actually go out in payments.
Understood. And Abhijit, from your standpoint, you guys are already a global company,
Yeah.
right? And payment is somewhat of a unique initiative for the Indian market at this point. How do you think about scaling up payments? Because it is a function of what rails exist in which geography.
Well, look, at a more general level, there's no better time to be an entrepreneur, specifically a fintech entrepreneur in India. And I'll tell you, for many of the reasons Samir said, India itself gives you scale. At a numerical level, you will hit scale at a global level here in this country, number one. Number two, I think you're at a disproportionate advantage to be in India because you have the entire emerging market of the world available to you. There's very few places. I mean, if you look at the major markets of funding, you've got the US, you've got Europe, you've got maybe China. But other than them, each are unique markets in their own way, but none of them are applicable in emerging markets vis-a-vis India. In other words, what I mean to say is, if you understand how to scale up at low cost, low margins, massive friction on distribution, hyper-competitive market, an open market, one that's not basically kind of semi set up for a couple companies to win. You've got a set of scale, a set of learnings in terms of everything other than the tech. The tech is critically important. That can be replicated across almost all emerging markets. I am waiting for the day where Indian companies basically should become the dominant companies in financial services and other services. When you think about Southeast Asia, when you think about Africa, these markets should be the place where Indian companies do exceptionally well because they understand all of the various components of scaling a business with very low margin in hyper-competitive situations, regulatory situations. And I think we're fortunate enough to have access to capital at a scale that's unprecedented anywhere as well.
That's true.
So you need capital to hit scale to have 7 years to learn all of these lessons. So with the type of capital we have available, the 4 or 5 startups that win in any sector here should be ready to move abroad very quickly and be very, very tough competitors in any market they go into.
Understand. One of the things that the payment industry is also demonstrating is a very dynamic relationship between incumbents and the innovators. So obviously UPI is all built on banking rails, right? And banks at some level have taken a backseat in terms of the customer experience here. What are the implications of this? Do you think really we are moving towards an environment where the infrastructure providers versus the experience providers are inherently different entities, or does this conflict potentially then surface up back again for banks to say, I want to own the customer at the interface level? Where are we headed in terms of the partnership landscape?
Startups versus banks.
Not versus, I was more thinking startups partnering with banks, right, at this point. But when does the empire strike back?
I think we partner with the banks. So WhatsApp's payments in India is with banks. And look, you can take two different models. I've always felt that ultimately the banking system is critically important. They understand their customers exceptionally well. I think the banks are becoming very, very progressive. And from what I've seen is that they are very open to partnering because ultimately they know that what they do uniquely is unique.